So imagine a company's flagship rocket experiences this major failure, like
Yeah.
basically setting them back half a year and just completely destroying their immediate launch timeline.
Right, an absolute nightmare scenario for any aerospace company.
Exactly. But now imagine their competitors' investors actively celebrating this disaster on social media.
Yeah.
I mean, it sounds crazy, but welcome to the deep dive.
For you listening today, we are jumping into a really short but incredibly dense piece of market commentary.
Yeah, it packs a real punch.
It really does. It's an excerpt from a source titled Eingefickter Text, and it focuses squarely on the financial and strategic fallout happening right now within the commercial space sector.
And it's just a phenomenal piece of analysis, honestly, because it forces us to look past all the fire and smoke on the launch pad
Wow.
and focus directly on the brutal realities of the corporate balance sheets.
Right, moving from physics to finance.
Yeah. And that is exactly our mission today. We are taking this brief text and unpacking how a single physical engineering failure creates this massive financial shockwave.
Oh.
Like, we'll explore how it derails corporate growth targets and how it traps these major players in a really bizarre web of reliance on their own biggest competitors.
Which is such a wild dynamic to actually see play out in real time.
Oh, totally. Okay, let's unpack this because there is a glaring counterintuitive reality right at the start of our source material. The text notes that Blue Origin recently suffered a, quote, major failure with a rocket. And yet, if you look at the social media platform X, the financial community is buzzing with a whole lot of optimism.
Yeah. What's fascinating here is the sheer mercenary nature of market sentiment. I mean, we really have to separate the physical event from the economic ecosystem surrounding it.
Right.
When Blue Origin experiences a major failure, it is undeniably a catastrophe for their internal timeline.
Right.
But the broader market, it doesn't mourn the loser.
No, not at all.
Capital simply seeks the path of least resistance. So the optimism on X isn't about cheering for Blue Origin's failure, right? It's about the sudden, unexpected vacuum of supply that this failure creates in the space launch market.
Because the global demand to put hardware into low Earth orbit, it doesn't just evaporate because one company's rocket had an anomaly.
Exactly. The satellites still need to go up.
Yeah, and our source explicitly points out that this failure acts as a positive catalyst for Blue Origin's competitors. The text specifically names SpaceX, and as a byproduct of this shifting momentum, a company called Rocket Lab, trading under the ticker symbol RKLB.
Both of which stand to gain massively here.
Right, and we also see companies like AST Space Mobile, referenced under the ticker ASTS, caught up in this massive surge of market volatility, which the text rather sarcastically describes as them having fun right now.
Yeah, having fun is definitely one way to put it. Let's look at the hidden financial leverage at play here. The space launch market operates on an extreme bottleneck. There are very, very few companies capable of delivering heavy payloads to orbit reliably. So when a major player like Blue Origin takes itself out of the rotation, the remaining players don't just pick up a few extra contracts, they inherit immense pricing power.
Oh, wow. Yeah, that makes sense. Let me build a framework for that for the listener. Think of the space launch industry like a major global shipping canal.
Okay, I like that.
Right. If a massive cargo ship gets wedged sideways, blocking the entire route, the global demand for the electronics or the grain on those ships doesn't magically stop.
Right. People still need their stuff.
Exactly. The shipping companies immediately have to reroute their vessels to rival canals or take, much longer sea routes. So a total disaster for the company managing that blocked canal translates into an immediate, unexpected windfall for the competitors who suddenly capture all that rerouted, desperate traffic.
That's a great way to visualize it.
Yeah, so SpaceX and Rocket Lab are essentially those rival open shipping lanes.
The canal analogy illustrates that shift in traffic beautifully, but we need to elevate it to capture the specific financial devastation occurring in the space sector.
Okay, how so?
Well, unlike a cargo ship carrying grain or consumer electronics, these satellite companies are carrying their entire future valuation in their payload. If a cargo ship sits in a blocked canal for 6 months, the goods arrive late. It's bad, but they survive.
Right.
In the growth tech sector, if a satellite sits in a warehouse for 6 months, the company's financial model completely starves to death before it ever reaches orbit.
Jeez. Which brings us to the core victims of this situation, the companies that are now just stuck waiting at that blocked canal.
Our source estimates that because of this major failure, Blue Origin's launches are likely delayed by a massive margin.
Yeah, the text points to an estimated 4 to 7 months of operational delays.
4 to 7 months, which is the crucial metric here. In the broader scope of aerospace history, a half-year delay might seem like a standard bureaucratic hiccup, but on a modern corporate balance sheet, especially for publicly traded satellite companies,
Yeah.
it is an eternity that can wipe out a significant portion of a company's market capitalization.
Okay, I have to push back on the severity of that timeline. If you're listening to this and wondering about the history of spaceflight,
Yeah,
I mean, delays are practically built into the DNA of the industry.
that's true.
Right. Apollo had delays.
Right.
The space shuttle had delays. We are talking about defying gravity. It is literally rocket science. So why does the modern stock market punish a few months of waiting so harshly?
Well, the punishment stems entirely from how these specific companies are valued by investors today.
Okay.
The text highlights a vital mechanism. These companies are, quote, priced primarily by forward growth. Investors are not buying the stock based on the revenue the company generated yesterday.
Because they probably didn't generate much yesterday.
Yeah, exactly. In many cases, these companies are generating minimal revenue while burning through millions of dollars in venture capital or public funds every single month. So the valuation is sustained by a strict, promised timeline of future revenues.
The source uses the phrase future revenue recognition. So if we look at a company like ASTS, or really any satellite operator for that matter, they are legally and functionally unable to recognize revenue until their hardware is physically deployed and operating in the vacuum of space.
Right. And that is where the financial mechanism breaks down. When you are priced by forward growth, you are essentially selling investors on a spreadsheet that promises sequential revenue generation.
Okay, so launch 1 unlocks X amount of revenue. Launch 2 unlocks Y.
Precisely.
It's like getting a massive commercial loan to build a luxury hotel. You cannot rent out rooms and recognize revenue until the building is completely finished and the doors are open.
That's spot on.
Right. And if your concrete shipment is delayed by 6 months due to a supply chain issue, you aren't just pushing your grand opening back. You are actively bleeding massive interest payments, paying your executive staff, and funding your marketing campaigns for half a year with absolutely zero income to offset it.
The cash burn continues while the revenue generation is totally paused. And furthermore, the source makes a devastating point about the compounding nature of this specific delay.
What do you mean?
It's not just that one single satellite gets pushed back. The delay creates a traffic jam that pushes back all subsequent launches. If a company promised investors they would hit their 45 targets.
Meaning strict quantitative deployment milestones, right? Like having 45 operational units in orbit to unlock the next tranche of funding.
Exactly. That timeline is now shattered.
Wow. So the spreadsheet model completely collapses. A 6-month delay on launch A means launch B, C, and D are also structurally delayed.
They are all pushed back.
So the financial projections that justified a billion-dollar valuation suddenly show a massive revenue hole for the next 4 consecutive quarters.
And the market reprices the stock immediately based on that new reality, regardless of whether the physical satellites are perfectly engineered and ready to go.
Man. So because these companies are trapped in this strategic nightmare with broken timelines and bleeding cash reserves, we really have to look at who is actually sitting in the waiting room.
Right, who's actually stuck.
Yeah, because it's not just scrappy, high-risk startups taking the hit. Our source points out that after months of investigation into this launch failure, Blue Origin is going to face a severe backlog. And the specific payloads sitting in that backlog include Amazon's Kuiper satellites and critical payloads for the Department of Defense.
Yeah, we are talking about national security interests and one of the largest corporate space initiatives in global history, both essentially parked on the side of the road waiting for a tow truck.
Here's where it gets really interesting. The irony of the proposed solution is just staggering to me. It's as if a major global airline, let's say Delta, had their entire fleet grounded by the FAA due to a systemic engine issue,
Okay.
right? And Delta has all these vital, high-paying corporate executives who absolutely have to get to a global summit.
Yeah.
So to get them there, Delta has to literally go online, pay premium prices, and buy first-class tickets on United Airlines, their biggest rival's planes.
That would be a tough pill to swallow.
Our source states plainly that Blue Origin is in a, quote, pretty bad spot being dependent on their competitor SpaceX.
The airline analogy works perfectly for the timeline aspect, but it actually breaks down on the engineering side, which makes the reality much worse.
Oh, really? How so?
Well, a Department of Defense satellite is not a corporate passenger who can just stroll off a Delta flight and walk onto a United flight. A payload requires incredibly complex custom integration with the specific rocket it was designed for.
Right, it's not just a box you toss in the trunk.
Yeah. Exactly. Every launch vehicle has different payload adapters, different acoustic profiles during launch, different vibration dampening requirements.
So you can't just take a satellite built for a Blue Origin rocket, duct tape it to a SpaceX Falcon 9, and press launch.
No, absolutely not. The engineering pivot is massive. Switching to SpaceX isn't just buying a new ticket. It requires re-engineering, retesting, and recertifying the hardware to survive a completely different launch environment.
Wow, okay. That explains the true depth of this strategic nightmare. Because if you're listening to this and wondering why a company with Amazon's nearly limitless billions can't just build a quick workaround, you have to remember the physics involved. You cannot simply throw money at gravity.
No, you really can't. Which means the power dynamic entirely shifts.
Right.
The barrier to entry for space launch is so astronomically high that there is no deep bench of backup providers. There is no viable plan C. When the Department of Defense and Amazon Kuiper are suddenly stuck in line, SpaceX holds all the cards.
Because they have the working rockets.
Yeah. Exactly. They dictate the launch schedule. They dictate the pricing premiums.
Which is just crazy leverage.
Oh, it's massive. If we connect this to the bigger picture, Blue Origin is forced into a humiliating strategic corner. They must rely on the very company they were founded to disrupt simply to fulfill their obligations to their most important clients.
Yeah.
And in the case of Amazon Kuiper, they are literally attempting to build a satellite internet constellation to compete directly with SpaceX's Starlink. So paying SpaceX to launch Kuiper satellites means Amazon is directly funding their primary competitor's monopoly.
That is just brutal. When the fundamental reality of a business becomes that painful, I mean, when your main launch provider is offline for up to 7 months, your forward revenue is crushed, and your only option is to hand millions of dollars to your biggest rival. Investors tend to panic.
Ooh, they definitely panic.
When investors panic, as our source points out, they start looking for comfort in all the wrong places.
Yeah.
Which brings us to the final piece of our source text and this whole phenomenon of squiggly line charts.
This raises an important question about behavioral economics and, honestly, how the financial community processes physical crises.
Yeah.
Our source notes that despite the devastating fundamental reality we just outlined, some factions of the market are actively trying to claim this entire situation is, quote, immaterial.
Which is wild.
Yeah.
And the author of the text firmly dismisses this narrative. They explicitly call out people using squiggly line charts, referring to technical stock chart analysis, to argue that the delayed rockets don't actually matter to the company's value.
Right.
So why do highly educated investors try to wave away a massive fundamental business crisis like losing DoD contracts by pointing at a moving average on a stock chart?
Well, it is a profound coping mechanism rooted in financial cognitive dissonance. In the stock market, you generally have fundamental analysis and technical analysis.
Right.
Fundamental analysts look at the physical reality, cash burn, supply chain bottlenecks, revenue recognition delays, and, whether a rocket actually reaches orbit.
The real world stuff.
Exactly. Technical analysts look at price action, volume, momentum indicators, and chart patterns.
The squiggly lines.
Squiggly lines. So when a catastrophic fundamental setback occurs, an investor holding that stock faces a massive loss. Psychologically, it is incredibly painful to accept that the company's future revenue model is fundamentally broken for the next year.
Sure.
A technical chart, however, doesn't care about a broken rocket or a delayed Department of Defense payload. A chart only looks at historical numbers. So terrified investors will look at a chart and say, well, the stock hit a historic support level, or the relative strength index shows it is oversold, so it has to bounce back.
Basically, they're looking at a line on a screen to avoid looking at an empty launch pad.
That's exactly it. Technical analysis is a completely valid tool for understanding market momentum, but when it is used to deny physical engineering reality, it becomes financially dangerous. Yeah. You cannot chart your way out of a 7-month launch delay.
No, definitely not.
And the author of our text is having absolutely none of it, insisting the situation is definitely not immaterial. They are demanding the reader look at the fundamental mechanism of the business, not just these arbitrary patterns of the stock price.
What stands out to me is the incredible discipline the author shows at the very end of the text. After pointing out all these massive disruptions, the compounding delays, the terrible strategic positioning, and the delusion of the technical traders, they offer, quote, no comment about buying opportunity.
That restraint is rare and highly commendable. I mean, it is an industry standard in financial media to try and call the bottom of a crisis.
Always.
Whenever a stock plummets on bad news, there is a chorus of voices yelling to buy the dip. But the author here refuses to blindly label a disaster as a buying opportunity simply because the start price is lower today than it was yesterday.
Because a broken business model with a shattered launch timeline doesn't automatically become a brilliant investment just because it's cheaper.
Exactly. A realistic assessment requires acknowledging that the bleeding might not be over. Until the physical bottleneck is resolved, the financial metrics simply cannot heal.
So what does this all mean? We started with a single, dense snippet of market commentary about a physical rocket failure. But by digging into the mechanisms beneath that text, we've uncovered a masterclass in reading between the lines of the entire commercial space industry.
We really have.
We've seen how a single launch failure by Blue Origin creates a massive shockwave. It provides a sudden, unexpected windfall for competitors like SpaceX and Rocket Lab.
And we examine the brutal math of companies priced by forward growth, like ASTS, showing how a 4 to 7 month delay doesn't just pause their progress, it actively drains their cash reserves, shatters their future revenue recognition, and forces them to miss those vital deployment milestones.
Yeah. We look at the extreme engineering lock-in that creates a strategic nightmare, leaving colossal entities like Amazon Kuiper and the Department of Defense stranded in a backlog, forced into a humiliating reliance on a single competitor. And finally, we explored the behavioral psychology of the market, where investors hide behind technical stock charts to deny the fundamental reality of an empty launch pad.
Because ultimately, the physical reality of the supply chain always dictates the final financial outcome. The spreadsheet and the stock chart must eventually bow to the physics.
They always do. And that leaves us with one final provocative thought for you to take away today. We spent this entire deep dive analyzing the chaos caused when the second biggest player in the space race stumbles. We've seen how a single failure creates a massive bottleneck, forcing everyone from scrappy satellite startups to the Department of Defense to rely on the biggest player, SpaceX, to save their timelines. But if massive global entities can find their entire financial and strategic futures dependent on the timeline of a single rival company due to just a 4 to 7 month delay,
Oh, I see where you're going with this.
what happens to our global space infrastructure if that final single point of failure, the one competitor they are all heavily relying on, experiences a major prolonged delay of its own?
It's the very definition of a fragile system.
Something to think about the next time you look up at the stars and wonder how much it costs to put them there. Thanks for joining us on this deep dive.